Moving on with the second part of how to trade binary options with the MACD oscillator or indicator. And while on the first part here on fairbinaryoptions.com, on the Binary Options Academy projects, while on the first part we were looking at how to actually apply the MACD on a chart, and this is the Euro US dollar, the 1 hour chart. On the second part, I would like to show you some examples and how to filter a good trade or a good signal based on, let's say, this MACD indicator. First of all, it should be mentioned, like also mentioned on the first part, that this histogram here is not showing anything else than the crosses between the MACD and the MACD signal. So as you can see here, at this very moment of time, when the green dotted line crosses below the blue line, that is the moment when the histogram, the MACD histogram, is actually starting to plot positive values, and then the market goes with the positive values until the MACD signal crosses above the blue line, and then the histogram prints negative values. So actually this histogram here, it is showing nothing else but the crosses between the MACD signal and the MACD, the blue one here. Now if you go back in time, let's go a bit back in time and then to come back towards the current prices. And normally, of course, that these are the signals that one should look for. To the downside, if you are looking to buy put options, or if you are looking to short a currency pair or a financial product, always look for the MACD signal or the green dotted line to be above the classical MACD, and that would be a signal to go and buy put options. And of course the histogram needs to be red. I mean, automatically it should be below zero, as it shows the crosses between the two lines here, the blue and green dotted lines. So that would be the moment where we should buy put options. Now, in binary options, when compared with the regular trading on the currency market or the spot market, in binary options what we have is the necessity to put an expiration date. I mean, adding the time element to any trade is one of the most difficult things that trader has to do. It's not only that one could make a forecast which should be the direction that the market makes, but also when the market should go to the target, and that is extremely difficult. In this case, we can filter the expiration date through the time period or through the time frame in which the indicator is being plotted. In this case, it is the 1 hour chart. Now, if you pick a signal based on the 1 hour chart, then the expiration date should be quite big, because take a look here. In this case, the market indeed goes to the downside. But it goes to the downside after the signal appears. It stays here at this level something like 8, even 14 and 15 hours. So even if it is on the 1 hour chart, my idea is that you should pick either end of day expiration date, if this is somewhere in the morning or in the first half of day, or even end of week expiration date. If this is on a Wednesday or even Thursday, I would not hesitate to buy put options end of week expiration date. And then the market moves to the downside in a strong trend. The bigger, you just look here, the bigger the distance traveled with the oscillators, with the two lines there not intersecting, then the stronger and powerful the trend. If you are buying call options here, on this cross, I wouldn't I wouldn't advise it, because you want to buy call options or put options as high as possible here. So this represents overbought and oversold level. So this is not that oversold, this is not that overbought. So you wait if you want, you draw two horizontal line. You put them somewhere around here, one around here, and one around this level, something like this, and you wait for the crosses to for the two lines to cross, the blue line and the green line to cross these lines, and then to look for a signal after the market comes here. So this would be a valid signal to the downside, and then the blue line almost comes here, and this would be a nice signal to the upside. So to buy call options once here, the market still goes and makes a new low. However, the market makes a new low, but the oscillators are crossing into the bullish territory again, gives a signal of another trade to the upside, another call option, and it stays from that moment on. It stays to the upside all the way here, and of course these options expire in the money as well. Then again, the market goes into our signal line here, and then we have a cross. Now this is a nice moment and a nice place to go and buy call options as well. Now the market is not moving to the upside immediately, but from this moment of time, and I'm talking about from here, basically you still have good chances for the option to expire in the money when compared with what price actually did. Anyways, never stay on the wrong direction if the MACD shows a cross in the opposite direction when trading binary options and when trading in general, of course. Thank you very much for being here. This was how to trade binary options with the MACD indicator. And under the Binary Options Academy projects, we also have mini educational series on how to use the RSI, how to use the commodity channel index, how to use, of course, the Ichimoku Kinko Hyo, or how to use the Bollinger Bands indicator. Basically, all the popular indicators there are to be found. Thank you, and keep in touch. Bye bye.